The United States government announced a plan to tax cryptocurrencies, and this is actually very positive for crypto investors. And here's why, and here's exactly what this signals. So, the biggest fear from some cryptocurrency investors is that most governments may make cryptocurrencies illegal because they view cryptocurrencies as the biggest threat to national security ever. Why is this the case? Because if you and I hypothetically use cryptocurrencies and not dollars or fiat currency, then what would happen is countries would literally go bankrupt. Now, when countries want to build roads or spend money on the military to protect themselves, the way they do this is they issue bonds. So let's do a quick case study. Let's assume that I'm the US government. Okay, and so I, as the US government, I don't make enough money from taxes to build bridges and other government projects. Therefore, I have to raise money from you, the investors. So how do I raise money? So I get a loan from you, the public. And we're going to use a real example from World War II. So this here is a bond, okay? The year is 1944. And I, the US government, I'm very worried that our country might be invaded and our freedom might be taken away. And I, as the government, I don't have enough money to build tanks. I'm the US government in this example, and I sell you this bond, okay? I give you this bond, and then what I do is I take your money, okay? This is fake money here. Okay, so you give me your money, and in return, I give you this bond here. Now, some of this fake money here, I'll use to build tanks. Okay, so that's gone. I've spent it to build tanks. And some of the other money, what I'll do is I'll take it out of circulation. It's gone. Okay, and we know that if the supply of anything goes down, like semiconductors, then what happens is the price goes up. Okay, same thing with baseball cards here. If the supply of baseball cards or any particular baseball cards is quite low, then the price goes up as well. It's just basic supply and demand. And this, by the way, if you're curious, I'm such a nerd. This here is a replica of the T206. It's a baseball card from like 100 years ago. If it was real, it'd be worth like $5 million. It's fake. And the reason, I got to go off track again here. Sorry, a little useless information, but interesting. The reason they used to put baseball cards in cigarette packs, the cigarette companies created baseball cards, is because when you bought cigarette packs, they didn't want the baseball cards to bend. Okay, interesting trivia. All right, so again, I'm the US government. I take some of the money out of circulation. And when I do that, the price of money goes up, meaning interest rates increase. And this we know is called monetary policy, which is the policy of money, hence the name. Now, what we're going to do is let's fast forward to the year 2050. And let's pretend that nobody wants US dollars anymore, and that everybody uses cryptocurrencies instead in the year 2050. Well, if this happened, and it's a stretch, but I want to humbly make a point, but if this happened, if everybody used cryptocurrencies in 2050 and not paper or fiat currency, then countries would literally go bankrupt. So the fact that the US government recognizes cryptocurrencies and taxes them, given their recent announcement, instead of banning them, this is actually a huge positive, okay? As it signals that they won't be banned. And there are some crypto investors that thought or think that most governments will ban them in the long run. Now, I know it's a stretch of an argument, but from a market signaling perspective, it actually validates the long-term investment thesis in cryptocurrencies from the largest economy in the world. And separately, as much as I love certain cryptocurrencies, I think many of them are scams. And as a crypto teacher, I've had so many of my students come to me telling me that they've lost thousands of dollars from crypto scammers. So imagine a world where most of the stocks on the stock market, on the S&P 500, were scams, and that most people that invested in stocks on the S&P 500 lost their money because of scams. Well, that is exactly what happened in America in 1929 when the stock market crashed and caused the Great Depression. And it was actually much, much worse in 1929 than it was in 2008 or 2001 or early 2020 during the peak of the COVID crisis. So in 1934, and this makes sense with respect to cryptos, I'll get there in a second, but in 1934, as a result of a crisis of confidence in the stock market, the government created the Securities and Exchange Division, which protects us from people trying to scam us with stocks. Now, the Securities and Exchange Division makes it law that if you want to go public with an IPO, or if you want to raise money to list on the stock market, then you have to give investors a legal document like this one here, outlining the risks, like this one here for Facebook. Facebook by law had to issue this in 2012 before they went public. And this is to protect investors because by law, and these are written by lawyers and investment bankers, all the major risks of a company and the risk of you losing your money are documented in this S1 filing that you can access at sec.gov. Now, when a crisis occurs, then many governments create some regulation to protect investors. Otherwise, what happens is you don't have an economy. So many people are now getting scammed with cryptocurrencies that there's got to be some sort of protection. And I've fought very hard for my students who've lost lots of money to crypto scammers. And I've even called government officials, but they can't do anything about it as there isn't even a tiny bit of regulation. Now, I'm a very big fan of smaller governments. But if we had some loose, but not too much, if we had some loose regulation on cryptos, then it would result in a decrease in the number of scams. And government regulation of investment markets usually takes place after investors lose a fortune, like in 1929 or in 2001. In 2001, Regulation Fair Disclosure was created so that hedge funds cannot have more access to information than us retail investors. Or regulation was created post-2008 when banks were deemed too big to fail. A crisis is starting to slowly emerge now, with people getting scammed with cryptocurrencies. And so a tiny bit of government regulation might make sense, which of course is better than outlawing cryptos altogether.